Friends, I'm going to talk to you about investing in a falling market. A falling market brings you a lot of uncertainty. You don't know when is the right time to invest. Often, most of us put away our investments, hoping that we would be able to do it in a far more gainful way after the markets have fallen further. This could lead to a sharper fall. But then, once you have seen the fall, you think you should wait longer. Never catch a falling knife is what many modern investment thinkers tell you. But then, conventional thinking is very clear that if you have to buy them cheap, you have to buy them when nobody else wants to invest in them. So there is no escape from buying into an investment when nobody wants to buy them and you find it very attractive to buy. We are probably gradually moving towards that point in time. Many of you have already been investing in a falling market. If you have an SIP running in mid cap or small cap funds, you probably have already put in a lot of money in a falling trend. Fears clearly are rising as to how far this trend could get worse. If you look at what happens even at the slightest panic in a few stocks, you notice that market-wide anxiety is growing very fast nowadays. All it requires is a little bit of a concern on one or two companies. And then you find that the concern spreads into panic across markets. You may be owning stocks or sectors which are not even affected by this panic, but your stocks will also fall along with the market trend. This could concern a lot of people who have already invested in SIPs and are seeing negative returns over the past year. Clearly, we are going to face a challenging year going forward. What should we be doing? How should we be investing in a falling market? Firstly, we need to understand that every rising market always inevitably follows a falling market. And if you want to profit a lot in a rising market, you need to invest adequately in a falling market. So this market fall is not something that you should abhor or move away from. Instead, this time you should learn to play it smartly by investing more as the markets fall. Where should you invest money? This is the most tricky part. It is probable that the spaces which did very well in the last rising market or the last bull market may not necessarily do just as well in the next one. So this falling market should be used to invest in other parts of the market or the economy which you believe will do very well in the future. Remember that nobody was willing to buy pharma, technology and consumption in the bear market of 2009, 10 and 11. And it is precisely these sectors which did exceptionally well subsequently and boomed in recent years. I'm not saying that these very sectors will boom in the next rising market. We could see something new. It is important that you identify that part or get the right advice to ensure that your investing is different, dynamic and dedicated to the future. Just doing what you did in the past mechanically may not lead to investment success in the future. Fresh thinking, forward ideas and strategies oriented to the future is what will make you a winner in tomorrow's investing. All the best and thank you for listening to this podcast.